Hello everyone, it's Joy and welcome back to QMake Weekly, where we bring you the latest Chinese steel prices and the market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, frequent macroeconomic news has created a mix of bullish and bearish sentiments in the market, causing Chinese steel prices to fluctuate weekly. So what exactly happened? Let's check it out. On the global front, Trump has hit Chinese goods with an extra 10% tariff, while the 25% tariffs on Canada and Mexico have officially taken effect. In response, all three countries have fired back with countermeasures, making the trade war even more intense. At the same time, weaker U.S. economic data is fueling fears of a recession, pushing the U.S. dollar to its lowest level in nearly 4 months. All of this is adding more uncertainty to the market. Back in China, the big news was the two sessions meetings, where the government announced its key economic goal for 2025. They reaffirmed their support for growth, focusing on GDP targets, deficit rates, and debt levels. But since the announcement was right in line with market expectations, there wasn't much of a reaction. What did shake things up, though, was another wave of speculation about crude steel production cuts. This sent iron ore and coking coal prices tubing, bringing down raw material costs and dragging steel prices down with them. Now let's talk about supply and demand side. Compared to last week, steel demand in China went up by about 260,000 tons, while total inventory dropped by around 190,000 tons, and the production fell by roughly 80,000 tons. Demand is still improving, and after 9 straight weeks of inventory buildup, stock levels are finally coming down. Right now, supply and demand are pretty balanced, with no major issues. Looking closer, hot rolled coil production and demand both went down, while rebar saw a big drop in both production and demand. This means rebar is in a better position than hot rolled coil at the moment. So what's next for the market? In the short term, falling raw material prices are keeping costs low, which is dragging steel prices down. But if we look at supply and demand, there's still room for demand to grow in March and April, while production and inventory are staying at manageable levels. Because of that, a big drop in steel prices doesn't seem likely. Overall, the market will probably keep moving within a range within next week, with prices going up and down depending on demand and the raw material trends. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye!